Good morning, traders. It's the 5th of July. We are Signal Centre Talking Bull. I'm Joe, joined by Jamie. Good morning, Jamie. How are you?
Morning, Joe. Yeah, I'm not too bad, thank you. Not too bad. We're without Steve today for the next couple of weeks, aren't we? He's got a nice holiday lined up.
Yes, he's off on his travels, enjoying some well-earned rest. So hope he has
Yeah.
a lovely, lovely time. But yeah, in the meantime, people are going to have to put up with us too. Hopefully that's right for everybody. Hope we don't lose any viewers. So yeah, welcome everyone. Okay, so we're going to do a roundup of the latest headlines in the markets. Then we're going to dive into the charts and have a look at the price action across various asset classes, and then we're going to give you guys some trade ideas on what we're looking at today. So let's start off with the market highlights and just bring those up on the screen. So over the last 24 hours or so, we've had German trade accounts dip into deficit. The Germany number yesterday recorded a record trade deficit of 1.1 billion euros for May. After a 3 billion surplus for April. This was the first deficit since 1991 as exports declined slightly on the month and imports posted a net increase as energy costs remain elevated. In terms of what's going on in Europe, Eurozone economic confidence dips. The Eurozone Centix economic expectation index dipped further to minus 26.4 for July from minus 15.8 previously, and that was well below the consensus forecast of minus 19.9. There was notable deterioration in Germany, and Centix also noted important distortions from the energy crisis. Inflation continues to be an issue globally. Swiss inflation now at a 29-year high. Consumer prices increased 0.5% for June, above the expectations of 0.3%, and the year-on-year rate increased to 3.4% from 2.9%. And again, this was above the expectations, which were at 3.2%. We're also seeing similar situation in Canada, where inflation concerns have increased there. The Bank of Canada Outlook survey recorded an increase in inflation expectations, with most businesses expecting rates above 3% for the next 2 years. Overnight or earlier this morning in the UK, the Royal Bank of Australia hiked rates to 50 basis points higher than they currently are. That put the overall rate at 1.35%. And that was done at the latest policy meeting, which was in line with expectations. They also indicated that interest rates will be increased further in the short term, although it reiterated that that would be data dependent. So that's pretty much that for the latest news. So we can have a look now at some charts. Going to start off while Steve's off looking at Bitcoin. This is the daily chart we've got on the screen here. So obviously slightly different from what Steve looks at because we've got our own interpretation of charts, and that's what technical analysis is. We can all see different things, but from my perspective, we've got a really large range here, which I think Steve's identified too. I've got a head and shoulders top actually on this chart, and we've seen a pretty severe breakdown on the price of this over recent weeks. But if you are bullish on cryptocurrency, then there are potentially some reasons to feel a little bit more excited potentially about price. We've got a really large support level that seems to have formed here at the 78.6% Fibonacci retracement level. That comes in on my chart at 17,798 and seems to have done a pretty good job. That was back in the middle of June. And since then, we have seen prices reverse a touch to the upside, topping out around about 21,800. Now, in recent sessions, we have dipped back lower, but we haven't retested those previous lows. So potentially what we're forming here is a higher low, which will be good news for the bulls. Now, I've identified this swing high here in yellow at 21,866 because I think if we can overcome that, then there is potential for a little bit of a correction to the upside, potentially forming a bit of a double bottom on the Bitcoin chart. Now, this is a daily chart. But if we go one bottom there and potentially, and it's just potentially at this stage, another bottom here, by breaking above this neckline, that could send us higher in the very short term, which would provide some much needed relief for crypto enthusiasts. And in terms of where the upside could head to, we've got a measured move target of this potential double bottom that comes in at 26,132, and then a 61.8, a 1.618 extension of that comes in at pretty much the previous support, now term resistance at 28,794. So we'll be keeping a keen eye on that over the next few trading sessions and see whether or not we can test that level and eventually break it and provide some relief on the price of Bitcoin. If we take a quick look at Ethereum, it's a similar sort of situation potentially forming here. We've got the 78.6% again. This comes in at 11.05. We did have a pretty large overshoot of that, however, but prices are sort of stalling in and around that zone. We've got two levels here to be mindful of, which add up to a decent level of resistance, which comes in at 12.66. If we can overcome this level, then for me, we could be about to see a decent little correction to the upside on Ethereum as well. In terms of the double bottom here, if it does form in the same way as what we've seen with Bitcoin, then that projects upside targets to 1682 and then an extension of that to 1930, which is just into this zone of resistance here. So I'm not saying it's going to be a full-blown recovery by any means, but there is potentially some scope for some upside here in some of these cryptocurrencies. So looking for confirmation with breaks above those swing highs that we posted over the last couple of weeks or so. So moving on from there to commodities, let's take a quick look first of all at oil. So we have continued to see prices remain at elevated levels. We have seen a break of trend here, as we can see by this blue line. We saw prices slice through this back in middle of June, and prices have just really moved sideways ever since. Some bearish looking candles in and amongst this, particularly this one here that was posted on the 29th of June. We've got an engulfing candle and prices have been unable to get back above that. So for now, although prices are expected to remain elevated, I think we're going to see some quite choppy trading. So do be careful if that is an asset that you follow closely. I'd be looking to keep an eye on this level here, which is the swing low that we posted on the 22nd of June, which comes in at 101.07. If we see a break there, then that could see more downside in the short term towards support zone between 84.99 to 86.71, which, you know, for all of us that are struggling with energy costs, that would be quite a welcome relief. But doesn't really take away the overall bullish picture on the longer term view. Taking a quick look at gold, prices seem to have found some support over the last 24 hours at 1786.97. This is the previous swing low from the 16th of May. We saw prices crash into that level yesterday, 2 days ago, and reverse quite sharply, posting a decent looking shooting star candle. So by forming this potential double bottom, it's still very early to call that because we need to see some decent moves on the upside before we can actually confirm that. And for me, the neckline of any potential double bottom would be at that level there at 1879. But also what we have to consider is we do have the break of trend. This purple line on the chart, which if we go all the way back to these lows that we posted down here, which was in August 2018, then we've seen a break of that. We've seen a retest of it on the underside. So some work to do, I think, on gold before we can get more bullish about that. And obviously this is linked to the dollar index, which we'll come on to shortly. And while that remains at elevated levels, it's going to be a difficult thing, I think, for gold to continue moving to the upside. Take a quick look at silver. That broke through key support here at 20.45 and showing no real signs of any massive reversal at the moment. I'd be looking technically for a retest of this yellow line at 20.45, and that may trigger further selling. Looks pretty toppy for me, going by this large bit of price action that we have on the left hand side, this big range that had formed. We've broken down, we've retested the underside, and we are now making lower lows. Key level on the downside is the 61.8% fib level, which comes in at 1870. If we also look over here, we can see a number of key highs previously going back to 2020, which also offer some decent support as well. So this looks to be a reasonable zone to target in the very short term if you are looking at shorts on silver. Looking at some of the other commodities, just finishing up actually on copper, no let up on this at all. We're looking really quite ugly. 4 consecutive days of negative price action, which really started up here back at the start of June, it's been a really rough month. And again, commodity prices have got a little bit out of hand across the board. So this is a bit of welcome relief for anybody that's using raw materials in any sense, whether that be building or for any other uses that copper has. Let's just take a look at a fib level to see if we've got any reference for a potential support where this could halt the selling that we're seeing at the minute. So we go from those swing lows, not swing lows, those major lows that we saw back in March 2020, project that to the highs that we posted in March earlier this year, and let's have a look for some fib levels. So right on cue, we've got in yellow the 50% fib level there at 3.4986, which is pretty much fallen into to the tick, and we're right at that level right now. So I may have just found myself a gun to the head trade there with that. Very speculative, of course, because it's just fallen off a cliff, but potentially we could see some support come in at that Fibonacci retracement level. Okay, let's move on to FX and start off with the dollar index. That remains at elevated levels as we've come to expect. Pretty much the best performing asset class out there at the minute, and no signs of that slowing down. We've got previous swing highs here from the 15th of June up at 105.78, so expecting to see that tested in the pretty short term. If that breaks, then obviously we're going to start opening up some decent potential to the upside. We've got a 78.6% fib level at 110.25. Then above that, resistance at 111.31. So still scope for lots of upside potentially on the dollar index. And of course, that'll be tied to what goes on with the rest of the economy. Going to keep it quite simple on the FX markets today. Let's just take a quick look at Euro US dollar. So this is the flip side of what we've just looked at in the dollar index. Prices trying to test these lows down at around 103.30. If we get a break of these levels, then that would invalidate this thought of a double bottom, which we discussed on a speculative basis a couple of weeks back. It would need to get right above this level here at 107.75 to complete that. It's got nowhere near, and it looks as though prices are set to challenge these lows again, and then we'll be looking for much lower prices. And as we said on the call, the video yesterday, I think those are the lowest prices that we would have seen on Euro US dollar going back to 2002. So pretty scary stuff.
Yeah, and that looks ready for a break to me as well. I mean, it looks like it's set up quite nicely, maybe even today or tomorrow, I think.
Yeah, quite possibly. I mean, it's a very large support level that we've got here, resistance up here. So we've got a big range. If it breaks down, it doesn't look good at all. And if we go back over here to spot when prices were previously at these levels, we can see it's back in November 2002. Was you even born then, Jamie?
Just about.
Yeah, so pretty testing stuff coming up very soon on euro versus US dollar. Let's move it on to cable. That continues to bumble around these lows. We've got this 78.6% fib level at 120.24, which is providing some relief, but again, the overall trend remains so bearish that you wouldn't be surprised if that also gives way and we start seeing lower prices. And if in terms of when these prices were last relevant, we did actually see a bit of a crash on cable back at the turn of the pandemic. So the actual lows that we saw then were down at 114.08. And if we get through this low here, there's not really a lot in the way to stop it from getting down there. So looking pretty scary for cable as well, to be totally honest. Okay, indices, let's just have a quick look at those. It was a US holiday yesterday, so not really much participation across the board there. This is the NASDAQ, which is obviously one of the most popular indices around for particularly retail traders. Yesterday, futures were open, but we saw prices not do an awful lot, as you'd expect. Still trading in this downtrend, still looking for lower prices, still eyeballing this 61.8% fib level at 10,500 as the first port of call on the downside. If we look at the S&P 500, that's on the front foot a bit today, up by 0.67% on the futures as things stand, but overall prices remain under pressure and looking for lower prices here. Down towards this 50% fib level as the first port of call, 3,500 is the price level there. Take a look at Germany. That continued its slide yesterday. It engulfed pretty much the body of the candle in the previous session. A little bit higher today by 0.5%, but not really enough to get excited about. And it looks as though prices are going to continue slipping lower towards these previous swing lows that we posted back in March. And that comes in at 12,431. The one market that is standing up amongst all this is the FTSE 100, but limited opportunities, still trading in a pretty large range. No clear indication of where that's heading really at the moment. So if you are a price action trader that prefers to look at things like ranges, then maybe this is the market for you. But there's no visible trend in place on this at the minute, which means trading is likely to be quite difficult. So let's round up on the major asset classes. Jamie's now going to talk us through a few stocks.
Yeah, we'll check out a few stocks. As you were saying, Joe, it was a holiday in the US yesterday, so there wasn't a lot of trading. None of the stocks moved, but I said that yesterday what we would do is flick through a couple of the bigger names on a daily time frame, because we looked at the weeklies yesterday. Today we just go through a few on the daily, see how they closed last week, and see how things could open up this week. No biggest gainer and loser because they're all focused on US markets, so we'll just start flicking through. We just go through them one by one. So Apple, as we've said, ran into this 38.2 fib, and that's held up for now. The bullish case here, we need to kind of really break above this 143 level, above this recent, well, I guess it's a recent high, but if we do get above there in the near future, then this would be a higher low just here. I'm not really sure what best to highlight it, but you can see it just here on the chart, 135. And then we could perhaps be getting a return up to these 150 levels a bit later on. We've looked at Airbnb a few times, still looking pretty horrible. All the rallies are being sold into pretty aggressively, aiming towards this measured move target of this range we've seen. And that, I think, looks like to be happening in the next couple of weeks, the way it's going. AMC, I looked at this a bit last week, and we're really starting to coil. It's a bit of a messy chart. Let me try and sort it out a bit. We're starting to coil around this level here, which actually, if I didn't get rid of the last thing I did have, is a pretty significant level. You can see it's acted as support back in January and then again in March. It's then provided resistance throughout May and now into the back end of June and early days of July. So, excuse me. So this to me looks like it could have potential for a break upwards. We are still in a downtrend, but the bullish picture on this for me is if we do get kind of a close above this level on a significant time frame, then higher prices potentially. We did get this break above it here, but this kind of gapped above and then this posted this really bearish looking candle. So failed to break through there. It was a bit overextended anyway. So this is a better setup for me where price seems to be coiling before that breakout level and could have the potential to really have an explosive move. So we'll keep an eye on AMC because that's looking quite interesting to me. AMD, we looked at yesterday. This looks pretty horrible as well. We had this big sell-off, posted a bit of a flag type pattern. If this is the kind of thing anyone might have liked to trade, you can see just a bit of a consolidation before price actually gap lower. So maybe it was a little bit difficult to get in on that one. But yeah, price we looked at this yesterday, but a bit of a key level now on a weekly chart. We will monitor that throughout the week. I think where it closes this week would be pretty important. If we do start getting a bit more of a breakdown below this support level, I think the 61.8 fib is where we're heading next. Amazon, I want to take a look at. This is a bit of a, you could make the case for what I call a continuation head and shoulders pattern, whereby we have like a bit of a consolidation. The buyers look like they've regained control, but that was a lie. That was fake news. It looks like the sellers are still here, posting this lower high after this nice spike up. So the bearish picture for this obviously is a break of this 101 level we've got here, which has acted as support all the way through May and June. On the flip side of that, the bullish picture, if we can kind of get a close above 117, then this would be a higher low, so that would be a better look for Amazon. Alibaba, we've looked at a fair bit recently as well. Key resistance level, you can see it pretty obviously here, this 120, which has been tested throughout March, into the start of June, and now in the back end of June. Looking for a break of that, and then I think we'll be ripe for a return to 138, which after this pretty tragic run would be some much needed relief. We do have this pretty significant gap open here actually, which was an earnings gap down in November. So um, maybe that gets filled sometime. I don't think in the really near future, but it could happen. Could happen in the next few months if we get some nice price action. Coinbase, this is looking pretty. Ooh, it's not looking great actually. This is it. Descending triangle pattern we've got here after this really big sell-off. We looked at this last week, I think. Since the IPO, we were up to 365. Things can change really quickly. We're down to $49 now. And I think we are looking at a break potentially of this level. Things aren't looking so great. The case for the bullish picture on this would be a break of this downward resistance we've got here and a close above 62. That would perhaps provide a bit of relief, but certainly more interested in the break of this level. I think that could possibly happen in the next couple of weeks. Kind of depends on the crypto market, obviously. And as we've identified earlier, there is potential for some double bottom patterns on a couple of these cryptos, but if we do get that break lower and those patterns do fail, Coinbase will likely fail with it. So one to keep an eye on there. Nothing too much to say on Costco. We identified this last week. Let's draw a quick trend line. You can have something like this. You see the sequence of higher lows, and now it's kind of coiling a bit of resistance, so keep an eye on that. Potentially looking for a break to the upside, but still pretty bearish price action into this. This one, though, as we've noted a few times, the trend line that we had held up really, really well, with buyers flooding back in after that pretty negative sequence of weeks we had. We could actually be here all day looking through all these, so we'll pick a couple more. GME, as we've said before, I know this one is quite interesting to a lot of people. In a bit of a range, still looking for that break either way on a weekly chart. Not a lot going. I think, yeah, I'm interested in these highs here and these lows here. Until then, it's just going to be choppy. What should we finish on? Moderna, nothing too crazy there. Meta's just trying to hold up around the 61.8 fib. I still don't like the look of this too much. I think this could break lower. Maybe it holds up for another week or so, but the sellers keep on coming in. It's not looking great in my opinion. We'll finish on Neo. Neo, again, things do seem to potentially be turning around. We identified this potential for a double bottom, which isn't drawn so eloquently as Joe and Steve always do, so I'm going to try and work on that. You see it here. There's one, and there's two. So yeah, that's kind of what we're looking at, and if we do get a break of this level here, that double bottom is complete. So that would be a really nice pattern for those that like the look of this stock. We are seeing these higher lows. You can see we've got a bit of a channel forming here, that kind of thing. So yeah, I'd look for a break for this level. This looks better, clearly better than it has done, but I think if we do get a break of this level, particularly on a weekly time frame, on a weekly chart, that candle does look quite negative. It's kind of engulfed the whole previous week. But let's see if the buyers come back in to the market this week. I think that would be telling. And if we do get that, I think we said the measure move target, roughly, because the two bottom levels aren't exactly the same. So it'd be something like this. So it'd be kind of targeting these highs up here if we were to get that pattern play out. So we will leave it there. I really do talk for a while. One day I'll understand.
That's good. It's
yeah, that's kind of.
I really like that setup. That looks like it's got some potential. It is obviously speculative at this point, so anybody that's watching this, do bear that in mind, because it needs to break those levels on the upside before we can get too excited. We need that additional confirmation, right?
Yeah, of course. And I think for me, because this is a bit of a longer double bottom pattern, I'd rather see it break on a weekly. I feel if it was just a daily candle, unless it looked really strong with some good volume, I want to see it close above it for me on a weekly time frame. I think that would be important.
Nice. Okay, Jamie, nicely done. Okay, so we move this on now to the little challenge that we do on a daily basis, which we call the gun to head challenge. So basically, each of us that are on the video pick a trade idea live on the video, which we run between now and 9 p.m. UK time tonight, or when the stops or the targets are hit. So each of the ideas must have stops and targets. Obviously, risk management is crucial when it comes to trading. All of these ideas are placed at market and we publish them directly to our TradingView profile. So if anybody wants to check them out and see how we've done previously, please feel free to do so. I'll just bring that up now. You can see it here on our profile. So yesterday, Jamie was selling CAD Swiss. and it was into this nice resistance level here. So Jamie identified that, and he was slightly offside at 9 o'clock, but I think three quarters of
Yeah, I
an
didn't draw it
hour
up so well.
basically.
Yeah.
But that just goes to show, we look at these levels, we look for big resistance, big supports. They don't always work, and we're pretty honest about that. But when they do work, we're always looking for big returns. As you can see there, Jamie's looking for 3.39 R on that particular trade. Steve was selling Ethereum, as we discussed. It was a decent-ish day for some of the cryptocurrencies yesterday, so that didn't work out either. He was looking to trade this break of the short-term trend on a retest, but it moved pretty aggressively to the upside. But due to having a stop, his losses were limited. If we take a look at my trade on DAX, that was into a 38.2% fib level, looking for a 2.43 return on that one. Played out quite nicely initially. By 9 o'clock UK time, it was around 0.75 R on
Nicely
side, but
done.
since then moved a bit higher, so quite choppy overall. But yeah, those were our trade ideas yesterday. And now we've got to go again today. So I've actually got
Hmm.
one ready, and I alluded to it earlier. I wouldn't have found it if I wasn't covering Steve's commodity bit, but I was looking at copper. Now, this has had a terrible, terrible run in the recent month, really. I mean, that's pretty much a ski slope moving down, and a black run at that as well. It's really quite nasty indeed. But what attracted me to this particular market is that obviously we're going to be in oversold. I don't even need to look at the RSI to tell you that's oversold, given that move to the downside. But more interestingly, I'm a big fan of Fibonacci levels, and I know there's a few people that are skeptical towards them. But if we go from these lows back here at the height of the pandemic back in March 2020 to these highs that we posted in March this year, we've got this yellow line here, which represents the 50% Fibonacci retracement level of this entire move. And the prices are slamming right into it right now. So it's very speculative. It's very much against the trend. But already you can see there's a little bit of a reaction that's occurred on that level. So if we take a look at the intraday charts, this is the hourly. Again, got the 50% fib level on there. Seem to have had a bit of reaction from it. So I'm going to try and buy it. And this is highly speculative against the trend. But my blind faith in Fibonacci levels, I'm hoping is going to help me out. So I'm buying this at 3.5096. I'm targeting a move up to a resistance area that I've identified at 3.642, and I've got a stop loss at 3.4768, which would return me 4.28R if that speculative idea works out today. So that's my idea.
Nice.
Let's see how it goes. Feels a bit scary, but they're always the best ones, right?
It does, yeah, and I think the thing is there you highlight you get such good like reward out of that, and it's what we always say about cutting your losses short. If that does play in your favor, you're getting good return on it, so it makes sense, doesn't it?
Yeah, let's have a go. So that's going to be published right now to TradingView with a couple of details, why and the major levels. So if you want to check that out, feel free to do so. Jamie, over to you.
Nice, Joe. I've been caught in a bad spot. I've been scanning the charts, and honestly, there is nothing that I love. There was something I didn't mind though, but I've lost it. So we are going to go. A lot of these Euro pairs are in a bit of trouble. I was looking at this, but it's kind of getting away. I'm not sure, Joe. This is a really on the moment thing.
That's the game.
Um, it is. This is not exactly what I wanted, is it? I mean, would it be crazy selling dollar index? I think it would be, but it is at resistance. I think I'm just going to go for it. Otherwise, I could be here all day. Um, yeah, I mean, this could be silly, but actually, the more I look back, the more this is pretty significant as resistance there will go. I can actually extend this out on the dollar index. This is where we're at right now. Selling into strength, perhaps not the wisest thing, but you are buying on weakness. So, maybe these things play out okay. But as you can see, we are at a pretty key resistance level on dollar index. So I'm just going to have a go at selling it. You can keep your stop relatively tight and get decent risk rewards. So we'll keep the stop just above the swing high from back in the middle of June. And where should we target? We could kind of come all the way down to these lows, but I think we'll just go for these lows here. It closes at 9 o'clock, so if we bring this into 9, so that's actually tomorrow. So I've got to bring it really tight. That's 9 o'clock. I think realistically, are we going to get down to here by 9 o'clock? Probably not. We could well get to here though. So this is kind of playing the range we've got. Gives me decent risk reward. So we're going to set it at current price, which is 105.54. We're going to take profit at 104.66 and have our stop at 105.86. Like I say, just above these highs over here. This gives us a 2.75 risk reward. This, I think, like yours, Joe, is pretty speculative, coming off the back of aggressive up moves and down moves, both of us. But as we've said, if these do pay off, you get some nice risk reward, and that's the aim of the game. So hope for a bit of a move lower on dollar index today.
Yeah, that would help me out as well, actually, on my copper position. So
Nice.
yeah, any weakness in the dollar would help strengthen copper. And other commodities, of course. So that's that. Two trade ideas for you guys to take a look at. Bear in mind they are highly speculative, and we've effectively just come up with them on the spot. As analysts, we pride ourselves on spending just a bit more time than that on analysing charts and understanding market factors. But this is just a bit of fun, and yeah, check those out if you wish. Okay, so data-wise today, anybody that's new to trading assets like FX or indices or commodities, it's important to understand that there are key economic data points that come out throughout the trading day, and they can impact markets quite dramatically. So in terms of the day ahead today at 9:30 UK time, we've got the latest PMI services index read in the UK, which could impact potentially anything linked to sterling, potentially anything linked to the FTSE 100 as well. So do be aware of that. Other than that, it's pretty quiet actually for the rest of the trading session. On the news side of things, we've got the US guys returning today after the 4th of July celebrations. Throughout the rest of the week, we've got some other key data points to be aware of, most notably the ISM index services in the US, which is out tomorrow. And we also have the latest Federal Reserve minutes as well. So there'll be further chatter on what Jerome Powell and his team are set to do with regards to managing the US economy and interest rates. Then on Friday, we've got the latest non-farm payroll number, which is always a well-watched number and often creates quite wild volatility. So brace yourself for that later on this week, particularly if you're invested in or trading in any FX currency pairs. And we also on the same day have the Canadian employment report as well. So a few bits to keep us interested throughout the rest of the week. That's pretty much it from us today. We can wrap it up there, and we'll be back tomorrow with a further roundup on the latest headlines and how the charts are looking as well.
Brilliant. Thanks very much, everyone.
Yeah, cheers, guys, and yeah, see you tomorrow. Goodbye.
Bye.